Hello and welcome to the step 8 in our business economics course about Candyland Ltd. Today we are talking about income statement analysis. So last lesson we have managed to look at how a multi-step income statement is presented. We have seen that we start from a result which is called value of production, and then gradually we take out all costs arranged by nature to get to some intermediate results that are of particular interest to us. Okay, keep it in mind, print it, or look at your notes and your spreadsheet. Okay, so first of all we start with the total revenues and the increase of inventories. We call it top line. The top line, why? Because it is the first line that you see. Okay, it is the very top of the income statement. It has an incredible importance in determining the success of the company. So in the top line we put all revenues and all increase in inventory. From there we start subtracting costs in order to get to what we call the bottom line, i.e. our net income. Why do we call it the bottom line? Well, because it is the bottom line. So we start from the top line, value of production. We start subtracting costs. We get intermediate results, and at the end we get to our bottom line, which is also the net income. Okay? In a multi-step income statement analysis, costs are arranged, grouped according to their nature. So first we think about inventories. If an increase in inventories is positive for revenues, a decrease in inventories will be bad for revenues. In fact, it is, because it increases the costs registered during the period. Then we have the cost of goods sold, which are basically direct production costs. So in our previous case, the aluminum, the glass, basically all raw materials and the labor that can be allocated directly to production costs. Okay, everything. Operating expenses are basically indirect production costs. Think about, again, the marketing department. It has no impact on production, but it is crucial for the company to be successful. Think about administration. Think about secretaries. Okay, think about everything that all the resources that are used by the company but have no direct link to a special product. Okay, still they are operating expenses and they have to be subtracted. Then you have a fourth category of costs, which is called depreciation. As we've seen, it's the allocation of long-term investment costs to the specific quarter. So in Candyland you have bought a robot. This robot in 3 months has lost value. It's not the same robot as before. Okay, then we have financial expenditures, obviously only if expenses, and usually it is the case, are higher than financial income. So usually you pay to the bank many more monies in terms of interest expenses than what you receive in terms of interest revenues. But in case you are very rich in terms of cash, you might have that finance adds to the bottom line. The last category of costs that we group together is basically taxes. Okay, so the total tax expenses are put together. From there we move and we get to these intermediate results that are very important, which are basically gross margin, EBITDA, which means earnings before interest, taxes, depreciation and amortization. Okay, EBITDA. We get to EBIT, earnings before interest and taxes, and gross income. So these four intermediate results give you very important information. Let's see what type of information you get. First of all, gross margin. It's a crucial measure because it tells you exactly how much are you making in terms of contribution. Okay, so your product are selling for a given price, your costs are direct costs are a fraction of that price, And so all the money that you are making in excess can be used to cover other expenses, operating expenses, depreciation, finance costs, and so on. But this gives you an idea about the profitability of the type of business you are in. Let's get to EBITDA, which is incredibly useful if you are compare companies in the same industry. So if you make intra-industry comparisons, it basically tells you what is your earning, what is your what are your earnings before considering interest, so the financial component of your firm, taxes, and depreciation. Why depreciation? Well, you are basically call it also gross operating margin sometimes, because you don't take into account the depreciation and amortization charges that you should consider. Why do you do that? Well, because the net of interest and taxes, it gives you a very good idea of what the cash flow that the company has generated during the period, i.e. the operating cash flow that the company is able to produce, the type of liquidity that it can produce. And the more liquidity you produce, the more you can leverage your business. So this is a very important, very popular measure. Then you have EBIT, earnings before interest and taxes. It is the operating margin, and again, it is a key measure to see how the company is working before considering the impact of its financial structure. So think of it, you have two companies doing the same business. One is heavily indebted. It will have a much higher interest expense. But if it's doing its job properly, its EBIT might be comparable to the others. So from there you understand exactly if the problem of a company is related to its operating activity or to its financial activity. Then you have gross income, okay, which is important because you spot whether the company is using some tax tricks to get a better treatment than competitors and so on. And if, for example, the tax component of costs goes down year over year, it means that either they have a very good advisor or they are exploiting some tax loopholes. Okay? So, in order to recap all this, we are doing this type of financial analysis on a classified income statement, which is arranged in a certain way in a multi-step form so that it gives you a lot of information. Okay, it helps us understanding what are the strengths and the weaknesses of the firm, and if you express all these results in a percentage form, all results are immediately comparable with all your competitors. So use this type of financial analysis to get a very quick and immediate idea of how your company is performing against your competition. And with this, I'm over. I finished my step 8 Candyland business economics CLIL course lesson. I'm looking forward to seeing you all at our next and for many final lesson.